Welcome.
And had signed an information sharing deal on bank accounts which came into effect from 2018 under the Common Reporting Standard. The CRS has been developed by the Organization for Economic Cooperation and Development. This step is likely to unearth the wealth which Indians have stashed away in Swiss bank accounts. In 2018, data from Zurich-based Swiss National Bank had shown that after declining from 3 years, that is 2014 to 2016, money parked by Indians in Swiss banks rose 50% to 7,000 crores in 2017 over the previous year. Swiss bank accounts. Many of us get curiosity on hearing matters relating to Swiss bank accounts. We have many apprehensions regarding operation of these accounts and how the account holders are being checked on their entry and how identity is established. In English movies, staff of banks searches hero thoroughly before allowing him into the bank. But in reality, this is not the story here. There are many Indian citizens having Swiss accounts. In 2016, the Swiss government and Indian government had signed an agreement for sharing of information under common reporting standards. As per the agreement, first list of accounts of Indian citizens were released by Swiss government and the list will be released in 2020. In the coming days, we can watch prosecutions and raids on our leaders and big shots. Now let us think why our Indian nationals run after Swiss banks. Swiss accounts are of two types, private and retail. Retail accounts are open for ordinary public who open accounts for their daily banking needs. Private accounts are open for those who come with big amounts. These private accounts are meant for millionaires, criminals, celebrities and government officials who are corrupt and those who need secrecy of their accounts. People who live in countries with unstable governments and banks in particular are knocking the doors of Swiss banks because of their security and privacy. Swiss banks maintain secrecy and confidentiality. Swiss law forbids bankers to disclose existence of your accounts or other details without your written consent. If a banker violates such law, he will be imprisoned for 6 months or a fine of 50,000 francs will be imposed. One can sue the bank. As such, banks and bankers are very cautious while dealing with accounts of their customers. One can sue for damages. Needless to say, Swiss banks are very careful about protecting your privacy. Depositor and banker relationship in Switzerland will be that of doctor and patient or with an attorney. Only exception to this rule is where depositor is a criminal, insider trader, drug trafficker or an organized criminal and where public interest comes first. Another big plus point is protection to your deposited amount. This aspect is covered under Depositor Protection Act 2004 of Swiss government. Banks maintain self-regulatory under Swiss Bankers Association norms. Swiss law demands high capital adequacy norms and liquidity. Besides, Swiss currency is considered more stable as they maintain gold reserves to the extent of 40% and their investment services and internet services are very effective. There are historical factors that account for the riches of Switzerland. In World War II, most of the Europeans and Germans have deposited their gold and currency in Swiss banks because of their reputation for security. After war, many of the depositors were killed, leaving no nomination. Number of such deposits are in dormant account category and were not returned. The gold thus deposited has been melted and reserved. Switzerland banks are branded for maintaining secrecy, stability, reliability and flexibility while doing and dealing with financial matters. So these are the factors why people run after Swiss banks for keeping their illegal amounts and properties. Besides, the Swiss banks are named after their excellent asset management techniques. Now starts the second part, how to convert the black money into white money. Here comes the participatory notes for the risk to convert black money into white in India. Swiss bank account holder hands over a check to a multinational investment company for issue of participatory notes. India is the only country in the world which accepts it as a legal document. Now the multinational investment company gives participatory notes to stockbroker in India for purchase of stock. In the morning, they invest in a stock at an appropriate day and time. Because of bulk investment, the stock price will increase. Then at an appropriate higher rate, they will sell off and thus gain in the transaction. To avoid capital gain taxes on this profit, these multinational investment companies invest in India company shares through Mauritius. If any amendment is made by the government to curtail this practice, the next moment the Indian stock market will collapse, causing drain of thousands of crores in foreign exchange. Will government dare to curtail this practice?